Come back to that in a bit, focusing on Dabur and the numbers that it posted, a PAT of about 149.5, and you saw sales figure of 1,461 crores, absolutely in line on the PAT front. Sunil Duggal is joining in with his views on Q1 numbers and how they've shaped up. Mr. Duggal, thanks very much for joining in. Let's start off first with the growth figure and how much of that has been price-led and how much of that has been volume-led.
Well, if you take the domestic business, the growth has been around 12% volume and around 4% price. I'm talking about the domestic consumer business. So 12 and around 4%, so 16-17% has been the growth here. If you take the overseas business in constant currency terms, it's been around again 16% in terms of volumes and around 4% in terms of price. So the growth has been largely volume driven. With inflation coming down and margin expansion happening, the scope for price increases is comparatively low. The need for price increases is comparatively low. Fortunately, the demand side has kept pace and we've been able to show strong double-digit growths in volumes across categories and across geographies.
Mr. Duggal, let's take a look at your segmental breakup. For consumer care, what's the growth look like? Food business, how is that shaped up as well?
Well, all the business segments did well. International business grew by around 45%. Of course, that included a translation gain of around 25% because of the appreciation of the dollar. Most of our overseas revenues are dollar denominated, so there was a considerable amount of gain we got on that front. But even the local currency, the constant currency growth was around 20%, so that was one strong feature. And then in the domestic market, we saw very good growth in health supplements driven by glucose and honey, also in skin care, home care. So most of the segments showed double-digit growth. So there were very few weak points in the portfolio as far as segments are concerned.
Ad spends as a percentage of sales is now at 15.6%, seen as a significant increase. Is that likely to continue? Do you see this trend in ad spends?
Difficult to say. What I would probably do is that if inflation remains under control and margin continue to expand, I would prefer to put more money on advertising and promotions, and you would see a similar trajectory happening in the balance of the year. Having said that, because of the monsoon situation, there is every likelihood of inflation coming back, and then again our margins coming under some pressure, particularly from the third quarter onwards. If that happens, then we may choose to compress advertising a little bit so as to maintain our margin profile. But it's a call which we'll take only later in the year. Our margins, as far as the second quarter are concerned, would still remain robust, but the outlook for the future is a little bit uncertain.
How much, you spoke about the monsoon and you spoke about how probably you'll see inflation peaking if monsoons don't pick up. How much of that had an impact on input costs, particularly for the Q1 performance?
Well, input costs came down. The material cost for the domestic business came down from, say, around 53% to around 50%, which is a big upside and contributed to around 200 basis points expansion in our gross margins. But all of that we put into A&P, so there was no flow through into EBITs, which were fairly constant at around 17% for this quarter as well as the previous quarter. But I think it's a healthier business profile of higher gross margins, higher advertising, even if the EBITDAs remain fairly constant.
Mr. Duggal, any price hike that you envisage in the annual?
Price hikes are happening few and far between, and they are more driven by cost impact in certain categories. So there's no secular price increase which we envisage at this point in time. I think it's going to be driven by inflation, and inflation becomes an issue of concern. We may have no choice but to increase prices, but I suspect that will happen only from the third quarter of this year. We hope not to increase prices because we do believe that there is a definite impact on demand consequent to high price increases, but we may not have an option.
All right, Mr. Duggal, thanks very much. Really appreciate you taking out the time and speaking with us. In line, PAT in line for Q1 for Dabur. The stock, however, is lower by 0.25%. Heymen, you want to take a shot on Dabur and then L&T as well?